Hello everybody, welcome to another video, and today we are going to be learning about petty cash books. Now this is very beginner friendly and it's very easy to understand. Usually petty cash accounts are given to junior accountants, simple bookkeepers, even cashiers sometimes. So it's very easy, very simple, and I hope you enjoy this video. So these are the chapters we're going to go through. We're first going to understand what a petty cash book is, obviously. Then we will understand what an imprest system is. We will look at some examples, and then we are going to go through some advantages and common errors to watch out for. Alright, so what is a petty cash book? Now, imagine you work for a business, right? And the business owner gives money to the employees. Well, not literally, but like they allow some money, specified money for the employees to use on refreshments, tea, coffee, and stuff like this to allow them to be motivated to work on a day-to-day basis in the office, which happens in most businesses, okay? Maybe if you had a part-time job, you have seen something like this happening, especially as a retail worker. Usually there will be a specified amount of money that will be given to the employees, and you can spend it on refreshments, sometimes even on stationery, what else? Transportation for sudden meetings and stuff like this. And it's very important because sometimes employees do not have the money to be paying for stuff for work, you know? It's supposed to be paid by the work itself, by the business, and which is a very nice thing. It's a big so the thing about this, right? This money specified every month for the employees to use, it is very small transactions. So we don't want to mix them up with the accounts, with the main major accounts of the business, because the amount of money paid is very small compared to big transactions happening in the company. And that's why in the name we call it a petty cash book. So it's like petty, like small little day-to-day cash expenses, okay? So here are the examples of such expenses, which could be like postage, stationery, taxi fares, refreshment, cleaning services. There are lots of examples that could happen. Now, what is the imprest system? Excuse me. So, the imprest system, right? Now, because the business has to give a certain money from a month to another to be paid for petty cash transactions, we need to have an imprest system. So, let's say the business just opened and the owner gives £200 or dollars for the business to use on small day-to-day cash expenses, okay? Which is good, it's all right. But this month finishes and you get to the next month. Now, the owner doesn't need to give $200 more, obviously. For example, maybe the employees just use $150 out of the 200 that were given from the beginning of the business. So now, whatever was spent was 150. The business owner will just pay 150 for the next month, so that it is update it again back to 200. Okay, so that's the imprest system. It's very simple, and I didn't want to keep saying it in full definitions like book definitions. I wanted to explain it so that you understand. If I had to say that, it will be like a fixed amount being advanced to the petty cashier. So we call the person who writes these transactions in the petty cash book the petty cashier at the beginning of a period. Sorry. At the end of the period, the cashier submits records and receipts. The main cashier reimburses the exact amount spent restoring the petty cash balance. Okay, so that's exactly, we just need to restore whatever was spent, not necessarily pay £200 or dollars every month. It's just to restore it back to its original balance. So some advantages of the imprest system, for example, to allow the misuse of cash to be prevented as much as possible, because sometimes employees can use that cash for their own good and nothing to do for job or work, and we need to prevent that. So a petty cashier is going to just write down everything or every transaction with those, every petty cash book transaction, so that it is accounted and we know what exactly is happening. It ensures accountability and simplifies auditing and control. Now, this is an example of what a petty cash book must look like. Now, you might be like, all right, what is this? So, don't worry about this. Now, a petty cash book does not have completely a debit or credit side. And as you see, we don't write that down here. We have a receipt side and we have expenses side. Okay, I usually remember it that way, and it's alright. You can remember it the way you want. It's totally fine. Now here, what we can see is happening is that on the 1st of November, the petty cash account has received $5,000, and folio is usually like which account is it referencing, and here it's referencing the cash book. So because the cash was taken from the cash book, which is a different type of account we will go through in the next video. So it is linked to this, because remember, every transaction has a debit and credit, because we've got the double entry standards every time in accounting. So in the cash book, that's where its corresponding double entry side goes to. Okay, so the folio tells you where to go, which account, to see the other side, what's happening. So alright, $5,000 were entered. So the petty cash account actually was just opened on the 1st of November, and we put $5,000 in there. And then on the 2nd November, now usually we don't use it for wages. I know this is a very poor example. I just wanted to use this as an example, but maybe it could be for wages of like casual, like people who are not inside the business, you know, who are outside the business but working to do a service for you. So maybe, yeah. What happened here is that, so every transaction happening in a petty cash book has a voucher number, so that we can look at the voucher number. All right, and now here the total, we've spent $100 on the wages, And here, now what happens here is that we have different type of categories so we can know what exactly is happening. Here we've got casual labor, so that's exactly what I said, that these wages were paid to people working outside our business, so doing a service for us. For example, we've got traveling expenses, stationery, cleaning, and then we've got some other things which I will talk about later. We've got postage. Now that was $300, and that happened on the 3rd of November, and that will be classified as a stationery expense. So here, this is just to classify what more about the expense and the details, okay? And we always have this section. The reason for that is because sometimes the business owner, because the business owner doesn't write anything in the petty cash, they don't know what's happening with the employees. When they see this, the classification of these expenses, they know exactly what's going on. All right. So then on the 5th of November, we see that we've got floor polish, and they spent $50, and if we classify that as a cleaning expense, so now we know exactly where that $50 went to. All right, then we've got taxi fare, $70, that's traveling. Wages, we've paid some money to the painter to do something for us, that's $30. Casual labor, bus fare, that's traveling expense, paper, that's a stationery. I'm really sorry. And then we got brushes and ink, that's obviously stationery. Now what about Paul Freddy? Now this is a person, right? Or it could be some sort of someone who is buying something from us, but on credit. That means they will pay later. Now sometimes those people might be on petty cash books, and there could be various reasons for that. Now they owe us $400, and we classify them as ledger account, and for that reason, because we need to go back to the ledger accounts of purchases ledgers to actually see where it links with the other double entry. Do you see what I mean? All right, because he owes us money, so his double entry account is going to be in a purchases ledger. Now, sorry. All right. So, what is happening in 30 November? Lots of stuff are happening. We see that, first of all, before we get to 13 November, everything is totaled. So every column is totaled. So now we know the total for everything, and the total of the total, which is here, 1,700, was paid out of the 5,000 we were given from the beginning of the month. That means if we think about it in the business way, right, or in the accounting way, in the imprest system way, we need to be paying 1,700 again for the next month for the petty cash book or for the petty cash account, so that we go back to the balance of 5,000. That's exactly what's happening, right? Now, here we write down receipts 1,700 because that's exactly what we paid by the time November finished. So out of the account, so we need to pay 1,700 into the account, and then that again, just like here we said it's linked to the cash book, right? And then here we've got November 30 because it should always happen in the end of the month or a period of time. It depends what every business likes to do. And then here we write down GL. GL stands for general ledger, and usually we put expenses into the general ledger, all right, except for the for Paul Freddy, he's going to be in our purchases ledger, which we already put, so we don't need to put it again. Then we need to balance off the accounts. Now we say that again, by the end of the month, we have to balance, saying that balance CD, which means carry down. Oh, sorry, I'm so sorry, right? And then we write down 5,000 because we had 5,000 on this side, on the receipt side. We put 5,000 on this side to balance it off because we can't have 5,000 here and 1,700 here and then 1,700 here, because then we want both sides to be equal. Remember, it's divided between, oops, sorry, the receipt side and then the expenses side. If we've got 5,000 here and 1,700 here, we need to also, and when they add up, we've got 6,700 here, we need to have the same on the other side. And that's why we say balance carried down. So now that's 5,000 to balance off our other side, and we get 6,700 on both sides. However, does that mean we've got that much money into the account now? No, that's not. That's why on the first day of December, which is the next month, we say balance BD brought down is only 5,000, right? It's not, we just did this to balance of both sides, the receipts and the expenses side. But then starting off with the next month, we have balance brought down only 5,000. We don't bring down all of the 6,700. All right, I hope that made sense. Now I know it's a bit tough to understand in the beginning, a bit of different way of thinking. I can understand, it's just, but don't worry, you can always watch the video as much as you want so that you can understand it. If you really still don't understand, comment down in the comment section. I might be able to answer your questions. All right, now here, this is another example, and these are some transactions happening in July, okay? July of this year. And we want to create a petty cash account or petty cash book, including all of these transactions. Now let's first of all go through the transactions and think about what we are going to do, right? Right. So on the 1st of July, the petty cash float, right, receives from main cashier 200 pounds. All right, we change the currency here, so dollars, pounds, whatever you use, it doesn't matter. And so we put that in our receipts, okay, on the left hand side as the date of the 1st of July 2025. 3rd of July 2025, we got paid for stamps, right? So that will be postage, £5. You see how small the amount is. There is no point of actually putting it into the main accounts. That's why we put it into the petty cash. Then on the 5th, we paid for bus, so that's traveling expense, and that's £8. So that's on the right side. Then on the 9th, we purchased some stationery with £10. On the 15th, we again some traveling expenses, £12. on the 20th, some refreshments, or sometimes you can call it miscellaneous, £6. 28, we did some, you could actually, the thing about envelopes, sometimes you don't know if you want to classify it into stationery or postage, and that's the problem sometimes. But don't worry, they're not going to be very iffy about it. They wouldn't really worry that much as long as it makes sense, you know? So that was £4 again on the right hand side of the petty cash book. Then on the 31st, we got to restore the imprest float, and that was £45. So that means all of this from here, from the 3rd until 28th, all of the money we paid must have been £45. All right, so now let's see how we put that into a petty cash book. All right, so first of all, we've got receipt, £200, and we connect that to our cash book, and that was on the 1st of July. And for the details, we write cash. Now, we do not put any voucher number on that, okay? Then, on the 3rd of July, as we said, stamps, and we put that into postage. Then we've got the rest, and I think we already classified it in the previous one. Then after that, we total everything. So the total of the total was £45. Total of postages, of every other thing, and then we get to the end of the month, 31st of July, we have to put in £45 into the imprest, so you see that in the receipt, and then every other expense total goes into your general ledger. Then again, that is still in 31st of July, we have a balance carried down, and we need to put 200 here so that we balance the right hand side and left hand side of the book, and then both sides now are £245. And then if we had to go for the next month, so the beginning of August, we will say 1st of August 2025, balance brought down, that will be £200 on the side. Okay, so it's very simple, not very hard. One of the sort of things you really wish everything in accounting was just like that. So it shouldn't be tough, but if it is, it's okay, no problem. You can always just rewatch the video, and sometimes it's just because I guess the thing about accounting or anything with finance and business and stuff like this, it's not very much taught in schools from the beginning stages of primary, secondary, and stuff like this. So when you first learn it, it's going to be kind of tough because it's first time learning something like that. Now, this is the final slide, and I will stop talking. I'm really sorry. But I just wanted you to really understand what a petty cash book is. So what the advantages are. So any easy to manage small payments. So now I have an advantage in my head that I forgot to put into the slide. And then I realized actually I don't know how to write about that advantage, but I'm going to explain to you. So if you think about this, right? Now, expense accounts, okay, are in general ledgers. And in general ledger, you've got an account for every type of expense, like postage, stationery, travel, miscellaneous, blah, 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 right? Now, if we had an account for every small little transaction happening, that's gonna give you so many different accounts just for expenses. But then if you collected all of, for example, all of the all of the money uh, spent on traveling, and then you knew how much you spent by the end of the month for traveling, which is £20, then you can take it to the general ledger, and then you go to the expenses part, and then you make an account just for traveling. You don't need to make an account for taxis, you don't need to make an account for bus, you don't need to make an account for every different type of transport. And it's much easier to manage because you've got everything in just one account. So this is, I don't know really how to explain this in any other way, but I hope you understood what I meant there. And then also it enhances internal control and accountability, reduces overload on the main cash book. I think that's a very important one. And usually this is the one that students will always remember, because you've got two types of cash book. You've got the main cash book, which will be on our next video, and you got the petty cash book, which is just something like this for day-to-day expenses. Then it also simplifies audit trails for small transactions, which is very, very great. All right. Now, some common errors to avoid. Now, what petty cashiers will sometimes do, which is not correct, is not good, is that they might not keep in track of receipts or vouchers, and those are important because remember from the previous video, those receipts are our source documents. They are our proof. Those are the root. It's the root of the accounting, bookkeeping where we built upon. If we don't have them, it can cause issues and problems, and we can start guessing numbers, and we might forget, oh, how much did we actually pay? What date was it? Even the date is very important. Okay, so misclassifying expenses, that's very important as well. Remember, the business owner needs to analyze where the money is going, needs to know where the money is exactly. The whole point of accounting is to see the finances of the business and how well the money is being spent and what the outcome of that expense is in all sorts of aspects. So we need to classify most expenses. But always, as I say, sometimes there are some expenses you're like, well, I don't know, is it this type or that type, just like the one we went through previously. And I don't think it can create huge error issues when it goes to that type, but we still have to make sure we have to avoid these errors. Now, failing to update balances, that is a very big problem now. Accounting and bookkeeping is just very important, all right? Now, overlooking periodic reimbursements, so like the imprest system, it's very important. Okay, we don't want to be putting in more money than we should every month into the petty cash account. We need to make sure we know exactly how we are updating the petty cash account every month accurately. All right. So, okay, so that was it for this video, and I hope you enjoyed. Thank you so much, and keep waiting for our next video. It's going to come soon, which is going to be about cash books.